Greetings to everyone, and how are you doing today? Well, on the back of a profitable week, we shall be heading into the new week with the hopes that we might be having an opportunity to take advantage of another wave of bullish momentum on the US oil. Though the market has stayed relatively calm as trading conditions remain subdued due to lack of liquidity in the market that is close to the end of last week. We begin to see um, volatility reduce due to lack of liquidity. And going into the new week, well, we are going to be looking at what is going on in this market from a technical standpoint. And let's see if there is any trading opportunity that we can take advantage of for this week. Well, last week we were profitable on the US oil as we were able to scoop close over 1,000 pips in profit, as you can see here, with daily commentaries on how we took advantage of all of the opportunities we took during the course of last week trading session. So here we are at the beginning of last week when we first of all took advantage of the sell momentum right below the $75 level before we started noticing bullish momentum. So we were taken out of the sell position at break even before we finally joined that bullish momentum here on Monday. And you can see here we saw buy pressure above the $75 level, giving us a confirmation that we are good to buy the US oil. So we rode the bullish momentum all the way up last week, and it actually gave us over 1,000 pips as we had multiple entries running. For those who would like to have a peep into how we took advantage of those moves with daily commentaries, well, I will be dropping the link to that video right in the comment section of this video if you want to have a look on how we took advantage of all of these opportunities during last week. With that being said, let's dive into the current chart and let's see what is going on in this market right now. Now, when we look at what is happening on the daily time frame, first of all, I would like to let you know that there is no macroeconomic event that will be driving price action for this week. So, this week might look a little bit dull as it might be laced with a lot of consolidation phase this week. But in as much as we are expecting lack of liquidity due to the holidays, we want to see if there's going to be some traction this week on the US oil. So that is why we are going to be taking a look on the chart from a technical standpoint. So where here we are on the daily time frame here, and if we look at what has been happening here, that is the second part of this year, second half of this year, which we will notice that price action has been on a bearish momentum, and this is evident after connecting the series of lower highs here to give us that resultant bearish trend line. However, if we zoom into the current structure, that is the area in the last couple of months here, we notice how price has been caught within a consolidation phase between the $93.50 level here, which has been serving as a resistance point for this channel. And then we also have the $78.70, $76 area, which has been serving as a demand zone for participants in this market in the last couple of months. A couple of weeks ago, we saw the breakdown of that demand zone to give us a signal that there is a tendency that sellers are still very strong in this market. However, following this breakdown of structure, we saw that we had buy pressure around the $70 level, which incited another wave of bullish momentum. And if we look at this from a technical standpoint, whenever we have a breakdown of a key level like this, we expect that price will come back to a retest of that structure to incite another wave of bearish momentum. But in this case, last week we saw a breakout of the $78 area, giving us a reversal pattern, which from a technical standpoint is a very strong signal that we might be having a reversal move back to the upside. And in that regard, we shall be looking at a possibility that price might likely come back to do a retest of the $85 level. As you can see here, we saw how that level was broken last month here, a level which also shares a confluence with the bullish trend line we identified during my last analysis on this pair. So we expect that price might likely come back to do a retest of that structure, judging from the fact that we have a breakout of the $78 level, which at this point is serving as the neckline of that reversal pattern. I will show you that in a moment what I mean by the reversal pattern here. So um in the last 1 month, we saw this bearish impulsive move that took price to the downside, hitting the $70 level. Then we saw a sharp rejection, bringing price into the $78 area. We saw a higher low as price was unable to break the previous low here. Then this led, and whenever we have a structure like this is a typical reversal pattern in the form of a double bottom structure. And whenever we have a reversal pattern like this, the next thing we want to be doing is to identify the neckline of this reversal pattern. And that's where we got the $78 area, which led with price action broke out of during the course of last week trading session to give us a mature reversal pattern. And from a technical standpoint, whenever we have a retest of the neckline like this, is a very good signal that we want to be joining the trend continuation to the upside. So this is one of the scenarios that I will be looking forward to this week, hoping that there's going to be some liquidity in the market. So if we start seeing buy pressure sitting right above the $78 level here, we want to be thinking of adding more position to the buy position we have here on the US oil, with the hopes that price might likely come back into the 83 $85 area here, which I was able to identify as a possible TP target for any buy opportunity on the US oil. Now, if we take into consideration the previous impulse leg here, as you can see, we had the impulsive move down here, and using our Fibonacci retracement to run it through the previous impulse leg, aiming at around the between the 50 and the 78.6% gave us this um, TP target zone if buy momentum continues above the $78 level. So I want to see price coming into the structure, and if we start seeing selling pressure around this area, we might be getting ready to join another wave of bearish momentum. So this is what I'm going to be looking forward to this week on the daily time frame. But before I drop the curtain on this analysis, I would like us to look at what I was able to see on the lower time frame. So scaling down to the 4 hours time frame, I was able to identify a simple setup, a simple structure here, which I will be using as my yardstick for the new week. Well, first of all, on the 4 hours time frame, I showed you last week here how price action has been caught within the descending channel. For a better understanding into my point of view here, I will be dropping the link to that previous analysis here so you can see what I actually explained here. So now, following the activities of last week when we took advantage of the buy opportunity right above the structure into this area here, going into the new week, we are going to be patient enough to see how participants in this market is going to be relating to the $80 level here to give us a clue of how price action might go this new week. So if the sell pressure continues below the $80 level area here, leading to a further breakdown of that bullish trend line. Remember, we identified this bullish trend line last week, which I will be calling a temporary one just for the sake of this current structure here after connecting the series of higher lows here. So we had this bullish trend line, which led to the breakout of the resistant level of the descending channel here. So with the breakout of that structure followed by selling pressure below the $80 level here, this might give us a sell momentum to do a retest of that resistant level of the descending channel, which also shares a confluence with the $74 area. And if we start seeing buy pressure, this might likely incite another wave of bullish momentum. So that is one scenario I will be looking forward to. So if selling pressure continues below the $80 level, then I will be looking forward to selling the US oil. However, during the week, if we finally have a breakout of the $80 level followed by buying pressure right above the structure, then we'll have no other choice than to look out for buying opportunity to join the rally to the upside. And if a further breakout of the $83 level happens, then we will be having another opportunity to add more position to our existing trade. So these are my views here on the US oil, but be rest assured that I will be jumping right in the comment section of this video during the early hours of the week to give you an update on what my expectation is going to be like after monitoring how participants in this market will be relating to this very important structure around the $80 level before making an informed decision for the week. If this video has been of immense help in making your personal decision on the US oil for this week, kindly support this project by clicking the like button. You would also want to follow me on my TradingView platform at Dark Sherry, spelled DARCSHERRY, so that you don't miss out on any of these updates I normally share in the comment section of all of my videos. Thank you for watching this video, and once again, Merry Christmas, and do have a wonderful evening. Bye bye.